Welcome to Beyond Table Talk, a space for real people and real conversations that move us from awareness to action. Each episode dives deep into the issues that impact our daily lives, financially, emotionally, and socially, with real talk from real people. We're so glad you've joined us, and we've got a powerful conversation ahead. Whether you're tuning in live or catching the replay, thank you for being a part of this community. Now let's get into it. Meet our moderator.
Hello and welcome to another Beyond Table Talk, a signature conversation powered by the Association of Black Economic Power. I'm Sherron Taylor, your moderator for tonight's conversation on your financial rights, understanding predatory lending. This is going to be a great one, and I'm glad you're here tonight. Before we get started, please take a moment to scan our QR code that's on the screen to complete a brief pre-survey. Your feedback is important to us, and we've been incorporating that information in our shows. So thank you for taking the time to do that. Too many communities have been targeted by unfair financial practices. Tonight, we're breaking down how predatory lending works, how to recognize it before it causes harm, and what you can do to protect yourself and your family. This conversation is about understanding your rights, making informed decisions, and strengthening your financial well-being. We're joined tonight by two fabulous guests, and you may recognize them from in the community and the awesome work that they do here in Minnesota. They will bring both legal expertise and direct community experience to tonight's conversation. Mark, let's get started with you. Please introduce yourself, your background, and how your work connects to consumer financial rights.
Thank you so much, Sherron, and I appreciate the opportunity to be here today and to address these important topics on predatory lending. Thank you very much. My name is Mark Heaney. I'm a consumer rights attorney in Minnesota. I've been practicing consumer rights for over 20 years now. My practice has spanned a variety of different topics under a broad consumer rights topics, including predatory loans, debt defense, auto fraud, auto financing fraud, and credit reporting errors. And my office is located in Minnetonka, but I serve the entire state of Minnesota. So thank you very much.
Thank you, Mark. We're glad to have you here with us tonight. And Anne, thank you for being here tonight. Please introduce yourself and your background and your connection to tonight's program. Good to see you again.
Hi, thanks, Sherron. It's good to be here. Hi, everyone. I'm Anne. I use she, her pronouns, and I have the privilege and joy of working at Exodus Lending as their executive director for a little bit more than 4 years. Exodus Lending, we work with Minnesotans. We are statewide, based here in the Twin Cities, and we do that we advance economic justice through consumer lending, community organizing, and advocacy. And what brought me here is I've got many years of experience of direct service. I have spent my entire career in nonprofits, whether that be running an English school for immigrant and refugees when I was younger, to 12 years designing financial health programs, financial coaching, free tax programs, financial inclusion, and banking. So I come with a sort of community-rooted view on seeing real life people come through our doors every day that are stuck in these predatory debt traps. Thank you for having me, and I'm excited to dig right in.
Absolutely. I just received a message saying from Tyrese over at Northside Forward saying, tell Ann hi. So I'm already getting community reaching out to you.
Hey, so, hi Tyrese.
Welcome. So tonight's conversation, predatory lending is not always obvious. It often shows up in moments of need when people are trying to cover expenses, manage debt, or respond to unexpected financial pressures. Tonight, we want to break down what these practices look like in real life, why they persist, and how individuals can protect themselves. Viewers, you are a part of our conversation. Can you type in the chat as we go, some of the things that you're thinking about, and we can bring those into the fold of our discussion. So welcome to you as well. I want to get started with understanding predatory lending. So, Mark, as a consumer rights attorney, and I should preface this by saying our work here at ABEP, we are not attorneys. This conversation is for educational purposes only. The information shared in general is general in nature, not intended as legal, tax, or financial advice. For guidance specific to your situation, please consult a licensed professional. And in this case, Mark, you are a licensed professional, and people should consult you should they have specific stuff. Oh, so I want to know, as a consumer rights attorney, how do you define predatory lending? And then I'm going to take it a little step further and say, what makes a loan or financial product predatory versus it just being high cost?
Okay. Well, it's a great question. It's the right place to start, because the line between a high cost and a predatory loan isn't always obvious. A high cost loan is exactly what it sounds like. It carries higher interest rates, fees that a mainstream bank and credit union wouldn't necessarily provide. Just because it's high cost doesn't make it illegal. Sometimes we hear about underwriting risk and risk pricing of loans, and so not everything that's high cost is illegal. Predatory lending is different, though. Predatory lending is when a lender structures a loan to extract value from the borrower rather than extend credit to the borrower that they can reasonably repay. The product is engineered to profit from the borrower's failure, not their success. So I want to just generally give you some ideas of what I think about when I think that something has entered into the area of predatory. The first is looking at the loan. Is there ability to really repay this loan at some point? Just by looking at the face of this, looking at the application for the loan, looking at the terms of the loan. Is this really designed with the expectation that a borrower is going to be able to afford the loan and repay the loan? It is a red flag in any case or any situation with any loan that in reality, it doesn't look like this is really designed with the expectation anyone will be able to repay the loan. The second part of it that I look for is transparency. A lot of our consumer protection laws are about disclosure, letting people know exactly the product and the loan that they are getting into. Has the annual percentage rate been disclosed? Have the terms of the loans been disclosed? Have the fees been disclosed? If those are hidden, if they aren't spelled out, if the company or the lender won't tell someone the terms, that's a red flag also. And I think of that as being predatory. The third is, are the terms designed to keep a person trapped? We hear about the debt trap a lot. And is the loan actually designed to help someone in a temporary situation, or is it organized, or do the terms make it so the person will be simply, or the borrower will continue to have to renew loans over and over again, or actually have to take out larger loans to be able to service the first loan? It's the debt trap that continues on. And then finally, targeting. In predatory lending, you will see targeting. It is targeting the most desperate people, but it's targeting working class people, and it is targeting people that are in real despair, whether it be a car that's broken down, whether it's been medical issues that have come up. We all know the circumstances under which one can find that. But these lenders are very adept at identifying who to target and how to find them now. So those are the things that I look at. And just because something's predatory, unfortunately, doesn't mean it's illegal. And that will, those are decisions, moral decisions people make, and we try to legislate about. But I may think that a 36% interest on a credit card, I think is predatory, but unfortunately, it's not illegal. And so those are the factors that I look at generally in looking at if something is predatory or not.
Okay, thank you for that, Mark. Some of those red flags. And from your work with Exodus and your experience there, what are some of the most common types of predatory loans you see when dealing with people? And would you say there are additional red flags that you want to note? Or I know that's...
Yeah, Mark covered it beautifully.
Yes, he did.
So really, I think I just want to summarize when these loans are designed to profit off a borrower's failure and inability to repay, it looks, smells, and is a predatory loan. So what we're seeing, let me start with the good news. So due to a hard-fought legislative success in 2023, so we refinance predatory debt. We define predatory as anything over 36%, and we serve Minnesotans, and we will pay off or buy out up to $2,500 of that predatory debt. So it's over 36% to work in our definition. So the good news is that after lifting our own community's voices, so folks that had gotten out of that debt trap that we were describing, we are not seeing storefront payday lending in Minnesota any longer, which means that you will no longer see that Payday America in that Pawn America, or that Unloan in the Unbank, or the payday lending at Ace Cash Express. So there's a win there. No longer seeing that form. I have to start with the win. However, this is a game of whack-a-mole, of that carnal go game. You get rid of one predatory actor, another creeps up. So we are really seeing everything today is online or app-based. And the most common, and the average APR, the average interest rate, annual interest rate that we're seeing is 283%. And the most common loans, because I want to name names out there if anyone's stuck in them, is Credit Ninja, Net Credit, With You, just to name a few. And these are sort of what advocates call rent-a-bank loans that are fintech or online loans that if you scroll down to the fine print of the website, you'll see that they're laundering loans through out-of-state banks chartered in other states that do not have strong consumer protections like Minnesota. So I'm going to name names. Utah doesn't have interest rate protections. They have no usury caps. And so these online lenders are basically laundering loans to Minnesotans to evade our laws in that sort of rent-a-bank. And I also want to name, while auto title lending is illegal in Minnesota on your car, we're a border state. We see a lot of Minnesotans go to Wisconsin and get preyed upon. And so we are refinancing auto title loans out of Wisconsin. And then sort of the last and most nefarious actor we're seeing today doesn't even sort of classify itself as a loan. But those are we call them predatory lending apps. So think of apps on your phone known by industry as earned wage advance or earned wage access, EWA. They have names like Earnin, Dave, Moneyline, Bridget, Cleo, Albert. They sound like a friend, but they certainly are not friendly. And these are not loans right now. They are not regulated as loans, but the sort of the subscription fees, the expedite fees to get your money fast. Basically, you're paying to get your own paycheck, and that is a loan. So we're working on regulating those. So that's what we're seeing today.
Wow. Okay. I appreciate you calling these organizations out.
Happily.
So people know who they're looking for, or raising an eyebrow like, oh my God, I have that and I didn't recognize it. That was an issue or could be a possible issue. Like Mark pointed out, like everything might be predatory, but it's at high cost. And by you calling them out says, here's what you need to look for between the two of you. Here's who you need to look at. And here's what you need to look for. So that's a lot. I may have to revisit that. I was trying to take notes of all of the information you just said because that's important. I have seen some of this stuff come around with Dave's and these friendly names that they're trying to, you can borrow money from Dave. So it
And
sounds
they
a little
usually
friendlier.
have cute mascots, right? Like they really are trying to get you. Yeah.
They're always uplifting names. That upgrade,
Yeah.
upstart.
Yep. Yep.
These are names that everything's supposed to give people the impression they're going to be on their way upward and on to better things, and they just are not. So.
Yeah, I mean, that brings me to a question like, why do these lending practices or organizations, companies continue to target like certain communities more than others? We could start with Mark. What do you think? And then I'm going to circle back to you, Ann.
Well, I think historically, as we all know, we have simply had a culture where the well-to-do and well-heeled have preyed on the working poor. They have preyed on minorities, African Americans, immigrants, any groups that are that can find themselves on the outside of traditional banking and access to credit. That is the big part of it. There's nothing new about it. It's underappreciated, I think, in some sense. But and maybe people are, since it's been a while. I mean, since redlining was going on. I mean, there are so many historical examples of this going on. Why do I think it continues to persist? Is because we have huge private equity groups, a lot of money out there, and they're always searching for the highest interest rate they can get on their money. They want to blend this out and make as much money as possible on the interest. So they are always concocting new ways, new products, any way possible to try to extract higher rates than they would get in more traditional lending.
Mm-hmm, mm-hmm. So the people who we may have heard the term unbanked, or like you said, not having traditional banking or access. Ann, what are your thoughts on that?
Yeah, I think I'll just underscore what you're saying, Mark. This is like 400 years of racist and discriminatory practices in our financial system and this environment was created by our mainstream financial institutions. They have been leaving communities behind in policy and practice historically and currently with things like overdraft and minimum balance fees, right? So I would say like banks are creating the environment that then these predatory lenders popped up to meet a need and demand, I'll bet with some pretty nefarious and harmful products. And we often are citing in the stories we tell, there is research published by Emory Law Journal that the marketing practices of financial institutions just keep these racial disparities and inequities entrenched. And empirical studies of banking and payday lending advertisements suggest that payday lenders are targeting African Americans and Latinos, and banks are marketing to white.
We're doing it down to zip codes, down to streets. Yep. We all hear about now in the news, AI is everywhere. AI is everything, but they are using algorithms to go down to the very street addresses. They know where they want to target these advertisements for these loans. And they're getting more sophisticated because they want to spend every dollar on advertising in that specific area where they're going to have the most success in finding consumers. So it's very, very targeted. And it's getting worse with AI and with the algorithms they put together.
Yep.
I mean, like you said, 400 years later, and then now to this very fine new process of who we are targeting. So for someone who's watching tonight, what are the warning signs? I know we shared earlier, Mark and Ann, some of the red flags. Are there specific warning signs that a loan or a lender may not be operating in its best interest?
Yeah, I can start here. I mean, I think simply put, if it seems too good to be true, right? It's too easy, right? And offers promises of a quick fix. And it's like not looking at your financial picture. It's not looking at your income to right size a loan to your financial reality. It's probably leaning into that predatory nature. So words like easy, fast, same day, often no credit. It is probably too good to be true. I think that's something. And I will also sort of with these apps that I was speaking to, these payday lending apps, if they offer subscription, tips, other fees, remember those are finance charges. Those count in the interest rate annual percentage calculation. So don't get fooled, because it is sure easy to, because who understands all this? I only do because this is my day-to-day job. That subscription fees, tips, expedite fees, they're finance charges too.
Yeah. And reoccurring oftentimes, right? When you say subscription every month, these charges are, or however they may set those up.
Exactly.
Mark, did I hear you? And you were about to say something?
Oh, I think that Ann nailed it on the head. I think that the old adage that if it's too good to be true, it is.
Yeah.
If you are walking away wondering, maybe in the back of your mind, how this person was willing to give you a loan, you got to understand that, and you got to be wary of why they're doing it, because they don't have your best interests in mind. I think if a person, if listeners out there have obtained a loan online from a non-traditional bank, national bank, I think it's worthwhile having those loans looked at, the paperwork and those. I'm seeing it with so many loans out there, and I mean, I'm talking about up to $10,000, $15,000 loans that are being done online. And so I would encourage people, if your listeners and everyone, if you have gotten a loan through it online, to really to have it looked at, to determine if it is. Check the Minnesota Department of Commerce's website to see if they're licensed to be doing this. In the state of Minnesota, there's a lot. It's okay to ask questions. We all got to inform each other what's going on out there. As Ann said, it's whack-a-mole. You know, they come up with one product, they're going to come up with another one once that's knocked out. So I would encourage anyone who's gotten these apps or these loans to take a hard look at them and ask for an attorney or to look at the paperwork and really analyze them.
Yeah, Mark, you bring up a good point. And you mentioned this earlier, that Minnesota has had some very intentional legislation that's gone to say, we do not play about our consumers as it comes to these payday and these quick loan places. Tighter laws than some of our other neighboring states. And so for that reason, thank you, Minnesota, for that. And folks who have maybe gotten a better deal, what they perceived as a better deal in Wisconsin for an auto loan or another loan. What are some of the real life situations that lead people to turn to these kind of payday loan or high interest rate? I mean, we're not like trying to beat up on people. We know there are real life circumstances that draw people to these. And you mentioned too, and sometimes it is like, I need 5,000 or whatever right now. They're saying I can get it now. Why not? So are there some certain situations?
The cost of owning a car is unbelievable right now, how much it's gone up. A simple repair now on a car can, as you said, set someone back $5,000, $6,000. And that car is their way to get the kids to school, get to work, get the groceries, do that.
Yeah.
Depending on where you live, our public transportation system is pretty good, but it doesn't extend everywhere. I see a lot with the medical bills now that are coming up, and we've seen the cost of the premiums for medical insurance going up and less coverage. So there's a host, and then just job losses. Those seem to be the big three that I see are the reason. And these are good people. They're hardworking people, but life happens. And unfortunately, life has gotten more expensive, which only exacerbates the problems and leads people to try to get the quick loan online. I'm going to get back on my feet. I'm going to do it. And I'm going to get it paid off. And those predatory lenders are right there online. to provide these products. They know exactly who they're looking for.
Mm-hmm. So, Ann, you're like you said, you're up day and night, and this is the work that you do in communities all the time around this. And so do you, Mark, as a consumer rights attorney, of course. But the payday loans, do you have some particulars or real life situations, Ann? And
Yeah.
Yeah.
Certainly. What's coming to mind is an image I'm not going to take credit for this, our Deputy Attorney General in Minnesota. We have a very strong Attorney General that really cares about fighting for sort of financial rights of Minnesotans. And our Deputy Attorney General often calls these concrete life preservers, right? They helped until they sunk me. So we ask all of our borrowers, all of the folks coming through our doors, virtually or otherwise, who refinance their predatory debt with us, what is your reason that led you to take out the loan? We don't ask up front, we ask when they're closing on their loan. And I just looked at some recent self-reported reasons just in the last month. Bills piled up after reduced work hours, death of a child, helping a daughter with college. Mark nailed this. Unexpected medical bills, car repair to cover rent and everyday expenses. And that's usually happening after a life event like losing a job or a medical expense. So we don't see folks, we don't believe that money mismanagement is
Right.
not, and behavior is not the reason, right? It's usually a very resourceful decision in a very clear and obvious moment when there was just too much month left at the end of your money, right? So these are usually a resourceful and immediate fix that leads to a loan and leads to financial strain and ruin. And we don't believe that a loan should ever be a tool that leads to financial ruin. So hence that concrete life preserver.
Yeah, that's deep. Concrete life preserver. Yeah, in that moment you need it. So Mark, as an attorney for this, what are some of the legal patterns or tactics that you see these lenders are using, especially when you need it? All those things that you just mentioned, and oh my goodness, and it could happen to anyone at any time, right? So auto repairs that are crazy, hours being cut and or laid off in this economy. There's been tons of that happening in Minnesota. So for folks who are out of state and viewing and joining us tonight, we know that that's happening in other states as well. So Mark, what do you have to say about that as far as like some of the legal patterns or tactics that we see the lenders are using that people may not immediately recognize as harmful? And so we want to, shed a little light on this. We know that things happen.
Well, I think Ann brought up a couple of important points before. The wage advancement loans, getting into the cycle of having a person pay a piece of their paycheck, the advancement on their paychecks, which just ultimately ends up being a cycle of every paycheck it getting larger and getting and never being able to get out of that cycle of debt. The big thing that I've seen with the larger loans, though, are what Ann talked about with a rent-a-bank scheme, where lenders are these companies, lenders online are associating with national banks like those in Utah in order to evade Minnesota's usury laws and the interest rate caps that we have, and also to avoid getting a license to make those loans. And I've seen these with a number online, and people need to understand, if they receive a loan from a lender who is not licensed as a regulated lender in the state of Minnesota, those loans are void. You don't have to pay them back, and in fact, you can bring a lawsuit to get the money you paid to them back. Okay. Now, this doesn't apply to federal national banks like Wells Fargo, Bank of America, but then again, they aren't these kind of loans. They aren't engaging in. But it is really important to know that some of these online predatory lenders are not licensed with the state of Minnesota, and they are arguing that they don't need to be, because they say, well, we're just arranging the loan with the national bank who doesn't have to get licensed. And My argument has always been, no. That's not how this works. You need to have a loan. If you don't, loan's void, go away. Leave this person alone, and in fact, pay back the money they may have given you.
Okay, so I want to just make it clear for our viewers. You said, correct me if I did not get this correctly, but if someone were to take out a loan and say it's from one of those companies that are from Utah or some other state outside of Minnesota, I don't want to pick on Utah, although that's one of the agencies that we know is doing some of the work, working out of their state. So you do not have to pay that loan back. It actually could be a possible lawsuit.
Yes, absolutely. And I'm talking about loans that are taken out online. I'm not talking about loans taken out from traditional national banks, but I am talking about ones that are taken out online where the lender knows that they're lending to someone in Minnesota and they are not licensed as a regulated lender. Under Minnesota Statute 56, under the remedies section, those loans are on their face void. And they need to be looked at, and it very well may be that the borrower does not need to pay back that loan, that they can bring a lawsuit and recover what they've paid to do that. Is what they've paid on the loan up to that date. So again, it takes I don't want to give people false hope that every loan they have might be. I'm just saying that there are avenues. It's really important to address these loans and to have them looked at, and there can be some really good remedies available. And strong consumer protections exist for a reason. We don't want these people making these predatory loans in the state of Minnesota, and we're certainly not going to provide our court system to help enforce collection on them.
Yeah, absolutely. Okay, so you made a couple of good points that I want to highlight in there, because you mentioned license in Minnesota. So there's a way to check that. For the Minnesota Department of Commerce, there is a licensing link, and you would just type in realtors, or lenders or broker, whomever. Minnesota Department of Commerce holds all of the licensing. So if you're a hairdresser or barber or realtor, those licenses will pop up here. And so, Mark, I hear you saying, make sure you check that.
Yeah,
if you have a loan right now, make sure you check that as a precaution. You were going to say something else?
Oh, I was just going to say, you're right on. The licensing is all done there. I would look up regulated lenders as one, small consumer loan lenders, short-term lenders. They're all listed. They should all be listed there. And if they aren't, you've got a real problem, and you need to have someone look at it.
Absolutely. Those links are in the chat for our viewers, should you need that. So good. Yeah. So that's one place to start. If you had additional questions, you could contact Department of Commerce as well as a consumer rights attorney.
Of course, we'd be happy to look at your loan agreements.
Yeah, absolutely. I wanted to ask Ann a question about how do these loans typically trap people into cycles of debt? I heard both of you use the term debt trap. So for our consumers, will you say more to that? How do they typically trap people into cycles of debt? What does that mean? And say more.
Yeah, I'm happy to describe that. So all of that variety of lenders, the online and app-based companies I talked about when opening tonight, they're profiting off of high interest rates. So those APRs, annual percentage rates, and long repayment plans that are and in case of these apps that we're seeing on their phone, they're really profiting off of repeated use, the fees off of repeated use after use. I'm going to start with the apps, and then I'm going to give you a real life example with how this is predatory. So for these payday lending apps, the ones I named that advance your wages early, they hook folks in by promising to advance your wages before that you've worked, but you haven't yet earned because of that, 2-week pay cycle. But they make you pay for them with subscription fees. They're frankly begging for tips. and expedite fees, and they won't stop popping up on your phone over and over and over. And we have learned through our own investigation, our staff sign up, our staff try it, our staff have sat down with the Attorney General's office to walk through it. We have learned that these apps purposely will advance smaller loan sizes and more multiple loans. So for example, instead of $200, they're going to do 2 $100 transactions to maximize the fees that they are getting from borrowers, right? So that's a trap. And let me just give you a real life case. This is somebody who came through our door. Obviously, I'm not going to name names, but this is an online installment loan. These are these rent-to-bank loans we're talking about. So we had someone who just recently, they applied for $2,000 in credit in a loan. And after 36 twice monthly payments, okay, of $173, they will have paid back a total of over $6,200. So they paid $4,200 as a finance charge on a $2,000 loan. So that is more like overall, the total payment is 3 times the original amount financed. So that annualizes to a 219% interest rate. That is predatory. That is getting somebody stuck in paying interest over the course of 36 payments, right? So that is a long-term out of your monthly budget. So that is how they're keeping people down.
Yeah.
2,000, pay back 6,000.
My goodness. Okay. So you made a point here, and I am a TikToker because I have young adults. And so one of the things that I've seen that's been going around, to your point about this real life situation, is young people saying, I have an auto loan. I only pay $235. They're doing that biweekly for an exorbitant amount of time. And they'll say something like, for 430 months. You're like, what? So it's crazy. And they are like, I just got this new car and happy about it, not doing the math, I guess, not knowing. So it happens. Yes. And because the payments feel convenient or at this time, but the long-term plan, what I hear you saying is you paid $6,000 for a $2,000 loan because they've stretched it out and have finance charges along the way for each additional payment.
Right. And that strains your monthly budget. And you needed it in the first place to solve something that was straining your budget, right?
Absolutely.
And Sherron, on those auto loans that they keep stretching out from 72 months on, and a lot of those times people aren't thinking about the fact that cars depreciate over a period of time. There's going to be a lot of repairs, and so looking at it, I don't think anyone should ever look at. I know it's difficult, but looking at the payment on an auto loan is the wrong way to look at it. You should look at the finance charge. How much is this loan going to cost? That is the number on a Truth in Lending Act statement that you want to look at. That will tell you everything you need to know about how much this vehicle and how much this loan is going to cost you over the period of time.
Look at the long game instead of that short term each month. Thank you for those examples. And that definitely made it very clear to me about the cycle of debt or the debt trap in that case. You'll find in our link for our viewers in our comments, we have a couple of different things that we've added. If you need to file in a complaint, where you would go under the Minnesota Department of Commerce, if some of this is happening or you recognize this to be true, or you have additional questions, see those links in there. You'll also, I see there's a question from Deborah who is saying, are there any remedies if your credit is impacted by these bogus lenders? I know.
I can answer that. I think that in the case if there is a loan that is void for the reasons that I've discussed, that they are licensed or that for some other reason the loan shouldn't have been made in the first place, I think that they're doing disputes to the credit bureaus disputing those debts on your credit report. Under the Fair Credit Reporting Act, which is a federal consumer protection law that protects the accuracy and privacy of your credit report, they have a duty to investigate, do a reasonable investigation. And they also need to inform the lender who is putting that on your credit report that someone has made a complaint. And if they don't remove it, and it actually is a void loan, you can have a cause of action against the credit bureaus and against the lender. That's a simplistic way of putting it. It's a way to say, yes, there are potential remedies for this. These loans, not only if they are void, do you not have to pay them back, they should be removed from your credit report also.
Yeah.
Yeah. Anne, were you going to say something?
I can't add, the lawyers got it on this one.
Yeah. Absolutely. There's a lot of talk about that too. How to get it removed. And in Deborah's question, also that's a second piece about, once your credit is tanked from working with some of these bogus lenders, and it's hard to get those things cleared up and or back on track to get your credit score up again. So Mark, you're saying pursue getting it off your report.
Yeah, and that's after it, and that may occur after a lawsuit about the underlying lawfulness of the underlying loan, whether or not it's a legal loan. So yes, I mean, I think that disputes need to be made all around. I wanted to just add, can I add one other thing, Sherron? I just wanted to reemphasize for everyone listening to what I said earlier. If anyone out there is sued on loans, either these loans that Anne's talked about, payday lending loans, or the ones I'm talking about that come from the internet, and it is really important to respond to those and take them seriously. I know that there's a temptation it can be so overwhelming. You put your head in the sand, you just make it go away. Sometimes you get the summons and complaints. Sometimes it won't have a court file number on it, which is confusing in Minnesota, but it's still a real lawsuit and you got to respond. The reason why is if you don't respond and you don't defend yourself, they go in, they get a default judgment against you, and it gets really, really hard to unwind those things. They can start using that judgment to garnish your wages, levy your bank accounts. So this is my announcement is to everyone, if you've gotten yourself and you found yourself in this situation, you're getting served with that lawsuit because they're saying you owe something, take it seriously, contact an attorney, contact legal aid, get your own answer to them in writing back to the attorneys for them. Just don't let it go, because it just makes things infinitely more difficult.
Okay, that's great advice. So don't think it'll just go away. Take the time to handle it and pursue it. There's another question in our chat from Facebook community. Thank you, Patricia, for adding that. Do these lenders report on-time payments to the bureaus?
It depends.
Do you guys know about that? It depends.
It depends. We've seen it on credit reports. We do a soft pull for education and sharing purposes. And it depends on the lenders, and they usually say it online, right? But Patricia, one thing I will say is that most people have to report the good, bad, and the ugly, right? So if they're reporting on-time positive payments, they're also reporting missed payments. And we all know credit reporting is that the negative hurts a lot harder sometimes than the positive. So it depends on the lender. And it usually says if they report, they'll usually in their advertising use that as a selling point that they report to credit bureaus. But for example, payday lenders did not. The storefront payday lenders did not report to credit bureaus. And obviously, these payday lending apps don't even count themselves as loans. So any repayment on that is not reported. So it really does depend. But I will say most people who are reporting positive are also reporting negative.
And I'm seeing the loans I'm talking about are also, they are being reported. The larger, not the payday lender, but larger loans, 5,000, 10,000 that are coming from Upstart, Upgrade, some of these other names, they are reporting. Interestingly, though, they are reporting on their name, not on the bank that they are renting to be able to get around Minnesota's usury laws. So that's an interesting point. But yes, they do report, and if there are inaccuracies or those loans are void, it should be removed.
Okay, just so we're clear, and we're just giving some very bulleted points. If someone believes they've been taken advantage of by a lender, what steps should they take?
I think that
Mark, what do you think?
I think that it depends what status you're in. I think that it's important to have the loan looked at. Get the loan agreement, all the documentation, and have it looked at by an attorney. Have it looked at by the Department of Commerce. I mean, take these loans and let us look at them and make sure that they're lawful. I think that is where you begin. If you're into collections and you're getting phone calls and these things, again, you want to have someone look at it. You want to get on top of this and get out front of it. If it's at a lawsuit level, you got to get a response back to the attorneys for that company within 21 days of when you're sued. So I think it's just staying aggressive on these loans and having them looked at.
Okay.
Yeah. And if you're a Minnesotan and you want an advocate and a nonprofit staff person to help you, come to our website, call our phone. We can also, this is sort of what we do in day out, and we can help triage, right? That we're in community with Mark, we're in community with debt management companies, nonprofit debt counselors. So, and then of course we can buy out predatory debt and refinance it at 0% over the course of 12 to 36 months. So, yeah.
So you can look at it and examine it. Mark can look at it, examine it. Department of Commerce can look and examine it. Step one. Then places like Exodus Lending and that you're from can also say, hey, we can help you get out of this. Mark is saying we can help you get out of this. We can help clear your credit. And you're saying in your organization, Exodus Lending, we can also maybe buy out some of this and get you on your way to get out of this debt trap.
That's right.
Okay.
That's right.
Wonderful. Thank you. You'll see those links in our chat for resources there for folks that are watching. And I also, Anne, I want to just follow up just a little bit on that. What alternatives exist for individuals who need quick financial support, but want to avoid predatory loans?
This is a great question. We recently we were lucky to co-release a report with a national organization that we work with called the Center for Responsible Lending. And that the whole report highlights Minnesota after predatory lending ended in Minnesota. And they did listen to 14 of our own borrowers, or people that were connected to our own borrowers. And a big question, it was those that had previously used payday loans. And the takeaway was people expressed real relief that it's gone in Minnesota, but they also expressed a variety of strategies they're using today, now that they're not relying on payday lending anymore, for managing their finances more safely. And so they named going to their parents and other family members. And some folks are like, oh, I should have just gotten over the shame. And, because there is financial trauma and shame in talking about money. And folks, are like, I should have done it in the first place. Somebody named, I'm renting a room in my home. I'm cutting back on expenses. I'm taking on additional paid work. I'm borrowing from my own personal network. I'm leveraging more community resources, and I will never pay full price. And I'm going to wait for a sale on a big item. And I just, to sort of drive it home, is Leah, one of our own borrowers, said, I would probably just ask my dad. I mean, the shame thing in the past is what kind of led me to take out the payday loan in the first place. And I kicked myself. I could have just asked him to help a couple years ago. But I also want to name, so if you don't have that, I also want to name, it's worth mentioning that more and more banks and credit unions are offering small dollar loan and credit alternatives. 6 of the 8 largest banks in the United States are offering affordable small loans. The caveat here is you generally have to have a checking account in good standing with these banks. So I'll just name a couple. US Bank is offering the simple loan. Wells Fargo offers a flex loan, and Huntington Bank offers standby cash, right? So there are more and more banks that are offering small dollar loans. And the thing is, they're not advertising them. I don't know the reasons, but you generally have to have a checking account in good standing to access their sort of lines of credit or their small loans.
Oh, wow. That was a wealth of information. I hope people are taking notes. I'm taking notes over here on my end, just so I know I can be a resource for folks too. In that, with alternatives on that, you brought up shame. Yes, I mean, that can be devastating. That can be paralyzing. But when someone says, I should have just done that. I should have just asked from the beginning and used some of those other avenues that you may have instead of taking the chance. I want to also ask Mark, what are practical ways people can protect themselves before agreeing to a loan? So if you're doing all the things that Ann just named, but you still need to agree to a loan, I know, and thank you for bringing up those banks and institutions that are having those loans available for people. I know a Rise Credit Union is working on that and making a plan to have that available for communities as well here in Minnesota. So I wanted to make sure people are looking for those too. Add that to your list. But Mark, back to the question: what are practical ways people can protect themselves before they agree to these loans?
Yeah, well, I was glad to hear Ann talking about some of the more traditional small lenders. I don't have the exact statistic in front of me, but how much money could be saved by consumers nationwide if we had the ability for people to borrow inexpensively for the short-term costs that happen in life that just can get it. At one point, Senator Elizabeth Warren was talking about turning the post offices in America into a place where someone could get up to a $5,000 loan. I'm paraphrasing, I'm not saying exactly, but being able to get past that hump of the car breaking down, one medical bill, these things, getting someone past that can really stop the debt cycle, the trap. As far to your question, I think it's very, very important to read the documents. And I understand that I'm saying that as a lawyer who reads documents all the time, and it's not one. Looking at the Truth in Lending Act statement, and that is the one that has the 4 boxes on it that tells you how much the annual percentage rate. It's going to tell you how much this loan is going to cost over the term loan, and really look at those terms and conditions on it. And I think that can be a bit of a sobering experience, looking at that and saying, I'm going to call dad, or I'm going to call, I'm going to try to get some help other places for this. Check, as we talked about before, checking the Department of Commerce, making sure that the people you're dealing with have the proper license to be able to doing these lending in Minnesota. Is it? And I want to give one warning to people, and something I see in my practice a lot, and it is co-signing. I get so many calls for folks that have co-signed on loans for friends, family, and stuff. I would really highly recommend people never co-sign on anything for others, because it ends up being some of these lenders want someone to co-sign on them, and if the loan doesn't get paid back, there's no alternative to you paying for it. You can't walk away from it because the person you were helping has disappeared or isn't paying or anything. I wanted to put that out as something that I see frequently. Not co-signing. Read all the documents, check the licensure, try to find any way not to be involved with these non-traditional lenders. Those are the big 3.
Okay, that's good. You talked about the Truth in Lending document. Also highlight earlier, we talked about transparency as one of the red flags. Like if they can't give you that document, in a way, then that would be one of the red flags, I'm guessing, right?
Oh God, yeah. I mean, if someone's not going to be straight with you about how much a loan is going to cost, well, first of all, they're violating federal law if they're not giving you a Trout and Lending Act statement, and you should be and you see it before you sign the documents. It's not afterwards.
Right.
You need to be able to see it before. What good does it do if you sign it and then they show it to you? So that's a big part of it is disclosure, and you should be able to see how much this credit is going to cost you and be able to think about it, but also shop around to go and look and say, well, that's not a very good rate APR, that's going to cost. I'm going to go to here or whatnot. So if people that are not willing, and this goes for car dealers also, if you find yourself not having your answers, your questions answered, if you're being pressured, if there's a feeling of a time crunch, you really got to be
sure.
Walk away.
When they we got to do this deal by the end of the day. In order to get this rate, you got to do it by that kind of hard pressure kind of language. Oh yeah, I recognize it. And they give people a ton of information because we get exhausted with lots of information. It wears people down, whether it's in the car dealership or it's signing up for a loan. They're trying to wear you down. It's best to walk away. Nothing's going to change in 24 hours after you had a good night's sleep and think about things. So we have a question in the chat around that. Is it possible to negotiate the terms? Thank you, Deborah, for that question.
I mean, we do it every day. Mostly, I mean, our staff on behalf and with our own participants, we, especially when it's a collection, right? When we see predatory debt get sold to collection, we are often advocating with and trying to negotiate the terms and lower that payoff amount. So yeah, it's definitely always worth a try. Wouldn't you say, Mark?
Oh yeah, and that goes back to my point about not burying your head in the sand when this stuff comes up or the lawsuits or whatnot. These lenders, let's say that these lenders, it turns out that the loan was legal, it's predatory, but it was legal or whatnot. They're business people. They want to be paid something. There's room to negotiate. There's room to settle. There's room to look at this. But if you don't address it and you allow it to become a judgment, it becomes very, very difficult to do that. So stay on top of it. But yes, the answer is yes, you can negotiate and settle. Now, whether or not you're going to be able to talk to the payday lender online and say, nah, I really would rather not pay 400% APR, I want to pay 200% APR. That probably doesn't happen, but after the fact, there's room to negotiate these things.
Okay. What role we just have a few minutes here, and I want to make sure I get this question out. And then I'm going to leave our viewers with some final tips from you guys. But before we go, what role does financial education play in preventing predatory lending situations? What would you say, Anne?
I mean, I think financial education, it needs to start younger. It needs to be in the schools. It needs to start in elementary school and go through high school. Right? It's right now, it shouldn't be a privilege to have financial education because your parents passed it down to you or they got you a credit card when you were young, right? Like, most of us learn about credit by damaging it when we are offered credit when we become an adult, right? Like that's the way most people are learning about credit. I think financial education certainly will equip and empower folks with the knowledge to sniff out these deceptive practices and identify the red flags we're talking about tonight. It gives people sort of the confidence to ask the right questions, to explore alternatives, everything we've been talking about tonight, right? But, and this is a big but, is that it doesn't overcome the structural and economic drivers that are forcing our neighbors and our community into the high cost debt. It doesn't replace regulation.
Okay, Mark?
I totally agree. Education is so important. It teaches people about how to be cautious, to look out for their best financial look out for themselves. But it is not a substitute for having strong regulations and collectively all of us looking out for each other by having these policies in place, because we can't all go through 10 pages of a loan agreement we need to have regulations that standardize those and protect everyone from the predatory practices. And then on top of it, just society-wise, we need to have people able to afford their lives, and that is that doesn't that's a whole nother conversation about equity and those things, but education is really important. I hope that, and I really appreciate all the work that your organization does, and I appreciate the opportunity and everything Exodus Lending has done. They have been great advocates at the state legislature for great consumer protection laws. So they've done great work. So.
Yeah. And I want to thank you both for tonight's conversation around predatory lending and all the information you shared. And Mark, you are absolutely right. ABEP is doing some stuff. Please take a moment, everyone, to look in our archives. You will see some conversations around financial literacy and the importance of that and the work that's happening in communities around that. And yes, absolutely, they should do more in the schools. I personally am in agreement with that. And then we have movement in that area happening. So in the meantime, I want to thank you both, Mark and Ann, for sharing your expertise with us tonight. And thank you to the Association for Black Economic Power for continuing to create space for conversations that inform, equip, and empower. Please, our viewers, take a moment to complete our short wrap-up survey. Your input helps us build programs that support communities and educating to achieve bold economic power. We'll see you next time. Thank you for joining us.
Thank you.
Thank you for joining us for another episode of Beyond Table Talk. We truly appreciate you, our viewers, and we want to give a special thanks to our moderators and panelists for sharing their wisdom tonight. You can check out their bios to learn more and their contact information. We also want to thank our sponsors who make these conversations possible. And we encourage you to stay connected, follow us on social media, engage with the conversation, and share with your community. If you'd like to sponsor an episode or get involved, we'd love to have you to be a part of this journey. Scan the QR code. We take this moment to thank our incredible team that brings this program to life. Before you head out, please take a moment to fill out the post-checkout form. Your feedback really matters. Let's keep the momentum going, and remember, the most meaningful conversations don't just happen at the table, they live beyond it. See you next time.